Hello all, Tony here. US equity markets closed lower on Friday on inflation and private credit concerns. But if Friday felt heavy, the weekend has unleashed absolute chaos as events in the Middle East appear to be spiraling into a major conflict. Following US and Israeli strikes on Iran, which reportedly have killed Supreme Leader Khamenei, Iran's response has been retaliatory missile strikes across the Gulf. Crucially, the Strait of Hormuz, the choke point for 20% of the world's oil, is effectively a no go zone. And while assessing the precise path of the conflict ahead is impossible, it is important to recognize the significant risks associated with this situation. A prolonged Middle East crisis, marked by an extended Strait of Hormuz closure, guarantees a sustained surge in oil prices, reigniting inflation fears and crushing hopes of additional Fed rate cuts. The erosion of rate cut expectations, coupled with soaring energy costs and inflation, would invariably weigh on risk sentiment towards US equity markets, which is precisely why we've seen US equity futures trading 0.8% lower at 68.30ish following their reopening this morning. Let's take a look at the charts of the Nasdaq and S&P 500 to see how things stand at the start of the new week. Right, a very choppy week for the Nasdaq over the past 5 sessions. You can see here it pushed up and then it came back down, pretty much well back to where it started. And that really has continued that choppy sideways price action we've seen in the Nasdaq since this high back in October. Now, nothing's really changed from our point of view. We'd still love to see the correction start to come down towards this area here, which is where the 200-day moving average sits around 24,100. Of course, it's reinforced by this low here from the 21st of November, 23,854. So we'd love to see a push into this support area here, coupled with signs of basing to give us potentially a setup for a long trade into the middle of this year. Now, with the way things have turned, and as we mentioned, there is some significant risks associated with the events in the Middle East. If we were to break significantly below this support zone, then it could open up the way for a deeper decline down towards 23,000. As we said, we can't predict what's going to happen. We just have to be nimble and keep an eye on these support and technical levels, which we have mentioned in prior weeks and again today. For the Dow Jones, there is an interesting development here. Now, we saw the Dow Jones really trade for 5 weeks in a range between, say, 49,650-ish down here towards support at 48,430-ish. This is the sideways price action I'm talking about before it made a move up to this record high at 50,512. Now, that high wasn't able to be built on. And in fact, we've seen the Dow Jones come back into that prior range over the past 5 weeks, which you can see here. Not only that, is it's broken uptrend support coming from the Liberation Day lows down here in early April. So we've got some technical damage. Now, the other thing that I wanted to point out was I also feel like there is potentially a head and shoulders topping pattern playing out here. Here's your left shoulder, your head, your right shoulder. And it's not a perfect one. They never are. But if the Dow Jones were to break below support, let's say coming in around 48,400-ish, and a sustained broke, that to me would give us the downside move projection towards 46,500. So the way you work out these head and shoulder top projections, it's the difference between the neckline and the head. So let's say roughly 2,000 points, and then you project that 2,000 points lower, which brings us in, as I mentioned, to this 46,500 area. So that is something to keep an eye out for this week. Thank you for listening and have a great week ahead.